Hello and welcome to Big Deal. I'm Nisha Poddar. Now let's talk about the startup space today, as the first signs of a massive down round has already emerged, with PharmEasy being the biggest talking point. But over and above that, it does have the color of an M&A, as a strategic investor comes in to the rescue as a white knight. Now, this is the story we first broke right here on CNBC TV18. So let's jump straight to the discussion on the M&A trends emerging in the cash-strapped startups and unicorns. Let me welcome on the show today Anuj Golecha of Venture Catalyst, Sumir Verma of Merisis Advisors, and Shaurya Bhutani from Capital Connect Advisors. Gentlemen, welcome to CNBC TV18. So we're being an iBanker, a deal maker. Let's begin with the most recent topic on PharmEasy. What's the sense that we should really take from this particular PharmEasy transaction that's going forward on the M&A trends that's emerging now?
Well, so I think we saw some of that even prior to this. As you know, I think I would put this as one which falls in that bucket of where tech meets the existing large players in the market. So, for instance, Big Basket now has startups on the cap table, pretty much running the company. You've had Reliance doing a lot of it, etc. Builders are getting active too. So, I think this is really where the tech startups who have been innovating in an existing market space are now, I would say, syncing up with the guys who already been there and large players, honestly.
Right. So taking off from there, Anuj, you come from the venture capital fund space. Now, how are the investors really looking at the scenario on startups being cash-strapped at the moment and the kind of valuation dip that we are seeing?
Yeah, hi, Nisha. So for investors, I think there cannot be a better time, because the vintage is so good. See, there's no dearth of innovation in India, and there's no dearth of good startup assets in India. It's just that the entry point of valuation probably has become more rationalized. So if people are able to enter good companies at the best price, there is no better time. Even if you see the current transaction which you're seeing, an industry veteran coming in and backing PharmEasy, a sector expert. Mind you, they are altogether putting 2,400 crores approximately, which is huge capital, right? So the execution capability and the fundamentals of the business are still being backed. For an investor, the price couldn't be better. If you see their other assets, even like Thyrocare, they are getting PharmEasy for like absolutely negligible prices, right? So for an investor, it's absolute best time for investing. We are very, very optimistic in the scenario. And while, yes, there are valuation dips, and it's bound to happen. 2021, early 22 was bull run because of liquidity. Now you are seeing rationalization happening, but fundamentals of the business being backed, and a lot of capital in good assets being deployed yet.
Right. Since you yourself mentioned the Thyrocare example and what's happening right now, Anuj, I have a counter question on this. See, the venture capitalists as well as private equity, the investors have their skin in the game. They have a lot at stake with many of these unicorns which are seeing the valuations dip and the businesses suffer. Now, in this particular example also, we have seen a very good trend emerging where Temasek and TPG, which have been common investors in a Manipal Group company as well as in this company, have stitched together this transaction and brought in a sort of a white knight. So it goes much beyond the down round scenario. It comes to the survival and deal making leading to these transactions. Is this one trend to view where VCs are going to be much more proactive in deal making?
Of course, it has to happen. See, not just startups, but if you consider any asset class, such things are bound to happen depending on the business scenario. The pricing of the asset will go up and down. We do it in public market. It happens in real estate and any other asset class. So this is not something different if a company was valued in 2021 like around $5 billion, and it was a sector where multiples were very high because of COVID, it was able to capitalize on it. Today, the business numbers still are good, right? And things like these are going to happen. As far as people like us who are into investing and deal making, this is one of the directions to go. See, M&As have been prevalent in the startup ecosystem, not just now, for last 10 years. You are seeing larger companies coming in startups like the Geo and the Tata and the other platforms. You are seeing staggered acquisitions happening where a Marico acquired a Beardo, and likewise you are also seeing where startups are acquiring startups. Oyo acquired Innovate and Swiggy acquired Super Delhi, and so many such transactions. At the same time, you are seeing startups acquiring traditional assets and M&As happening, right? That's the fourth way. And like we see, there would be some distress situations where there is a question of survival. And if the asset is good, the fundamentals is good, more importantly, the execution capability of the founders is good, there is value on the table, investors will come. So these are 5 ways where M&A is definitely happening since last 10 years in the startup sector.
That's right. And some of these trends are quite visible also, Anuj, at this point. So, Shaurya, looking at the present, atmosphere and the environment that we are seeing in the startup M&A space, we have seen Bulbul acquisition, we have seen Ustra, and the kinds of consolidation theme picking up. What are the trends that you are really keeping on your radar?
Yeah, absolutely. Nisha, first of all, thank you for having me on the show, and great to be here with Anuj and Sumer. In terms of when we're looking at I guess M&A consolidation from a cross-border perspective, or even domestic cross-border domestic acquisition perspective, the themes driving M&A is this, right? There is a lot of startups in Series A, B, which were planning to raise in 22, 23, and now, of course, because of the funding winter, that it is dried up, and effectively M&As are serving as I guess a beacon of hope for these guys, because on the buy side you've got Anuj mentioned the larger startups who are still cash rich and can enter assets at very attractive prices. I think we're seeing some larger startups making moves into the smaller counterparts, which is a big theme for us. And second, of course, is the traditional corporates, like of course Reliance has been on a rager, but other than that, even Manipal entering PharmEasy. It's a very interesting time we live in, because for the longest time there used to be this I guess animosity between the old world and the new world, or the new age startups and the traditional companies, because they never could see eye to eye on valuation. And now that the valuations have dropped, and the traditional guys can get their heads around the valuation piece for new age startups, they're seeing this as an entry point to enter the digitization wave for themselves, right? So that the second piece around the traditional guys, really, the family-owned conglomerates going after the new age startups, we're seeing that theme and quite interested in that theme.
Yes.
Even from a cross-border perspective, we're seeing a lot of interest into India.
So one very important point that you mentioned, and we have seen some bit of that happen. In fact, PharmEasy Thyrocare was one of the biggest omni-channel transactions that we had seen. And now, of course, it's going forward in other companies and other spaces in digital economy as well. So, Mir, what's your sense on this omni-channel approach and the big boys really coming in and lapping up the digital companies which are now coming cheap?
Yeah, absolutely. I know, I think Shaurya made a valid point that the valuations that they used to command were not something that these people would have got into, right? And I think this is where the rubber hits the road. And in reality, actually, we generally say that when a company gets mature, the valuations tend to become more real. This is happening even before these companies are maturing because of the circumstances that's happening. And it's a reality that pretty much all businesses, and the deals that you're flashing right now, a lot of them are consumer companies, as you can see. Essentially, it's omni-channel play, it's also multi-product to push to the same channels, right?
Yes.
So, I mean, if I just look at this first half of this calendar year, there were around 35 odd deals that have happened till now.
Yes.
And by far the largest has been fintech, and we can talk about that separately. But the next in line is consumer at around 13. If you add the ed tech and the healthcare, then it would be more like 16, 17 deals. A significant number of them have been done by consolidators who are there to consolidate, right? The Good Clams and the Goat brands, etc., and Reliance, right? So Reliance did Central, Reliance did Rusk Creek, etc. So essentially, it's a combination of not just omni-channel, but adding multi-product to an existing multi-channel, omni-channel approach, right? So it's a bit of both, actually.
That's right.
At this point, I can talk about fintech separately.
That's right. No, so Sumir, you added another dimension. Yes, that's another trend that we had seen and now is picking up hopefully more. So we have discussed actually a lot of trends that are emerging, but we'll take forward the conversation on more of the factors which are going to drive the valuations and how do we see even the fundraising, IPO and other forms of exits play out from our esteemed panel right after this short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal and we are discussing the M&A trends picking up in the startup space. Now, Anuj Gulecha, we were discussing what are these M&A trends and which direction is the startup world taking. But as an investor, what is it that is taking up most of your time right now? Because there are opportunities to make entry. There is a return proposition which could be worrying the VC world right now in terms of the exit propositions. And there could be new emerging AI kind of areas and pockets where new opportunities could be developing. What is it that you are focusing most on right now?
Yeah, it's an interesting question. See, returns, we are all like long-term asset investors when it comes to startups. Our assets are being held for 7 years to 10 years. So the cycles will come and go, and we will eventually end up making, hopefully. But more importantly, on the sector specific, something which is hot today may not be attractive enough for us. We need to see it pan out from a commercialization and business perspective. Today, our focus is lying on new sectors, which has not been touched by a lot of other investors. PropTech is one such sector where we are coming out aggressively, where there is no investor and there is so much innovation happening in the real estate space. The Fintech is definitely a sector which is evergreen and it cuts across so many different sectors. So we are always bullish on that. we have also invested quite a lot recently in the EV space, something which has an impact. And just to give you a sense, in India, like we would be having 7 assets, and across all 7 assets, we have seen one or the other corporate, whether from India or outside, coming and investing and taking a strategic stake. So this is a general trend where impact investments, EV space, climate are taking forward our mind space. But I'll just put across, it's the era of sustainable innovation which we are focusing. Founders, investors, employees, vendors, everyone is looking for sustainable innovation, and rationalization in the industry has helped quite a lot today.
All right, so those are the important things. But Anuj, do you think that the IPO market will be as benevolent to some of the exits that you may be looking at in your portfolio going forward? And what is the next best option for exits and making returns?
Yeah, for sure. See, IPO is an exit route for a lot of us. When we enter at early stage, we tend to get different kind of exit routes in the market through secondary exits other than IPO. But when we enter at growth stage through our funds, we definitely look at IPO as an option. The good part and the optimistic part as a fund manager, I will say, is IPOs for tech startups have started happening in the last 2 years. It has slowed down because the market has not been good and the valuations were not right when they entered the market. But this year we are optimistic of seeing at least 3 or 4 of our portfolios hitting the IPO market. Timing when it comes to doing an IPO becomes very important because it drives sentiment as well. But mind you, a company like Idea Forge, which dare I say was an innovative space, did probably pretty well. Their IPO has got oversubscribed.
Yes.
So it is a time where people, if you are entering the market with the right value proposition, right business, and right pricing, you are definitely going to attract investor interest. Yes. So
you're being optimistic about at least a few IPOs coming in from the digital space in this particular year. Let me take that as a big takeaway from you. But Shaurya Bhutani, what are the areas which are still looking attractive at this point, and the goes and the no-go areas for investors in your view?
Yeah, absolutely. I mean, I think fintech and specifically SME and consumer lending, evergreen sectors, also quite profitable, some of them. So the unit economics match, and given that the market has turned around and said that it's not growth at all costs, it's actually you got to make money. So fintech is an evergreen sector, like Anuj said, but also one which makes money. From a global investor perspective, we are getting a lot of, I guess, inbounds around what are the good fintech growth investments to back in India. And second is, on trend as well, but I think the trend will continue is climate tech. And within that, it's really India's taken the lead in agri-tech, right? Because the problems which India is solving for are emerging market problems, and those aren't US models which can be imported. So we see a lot of the interest coming to agri-tech, climate tech, and especially, how can we grow the agri solutions in India and then export it to Indonesia and all of those, developing markets. So we're quite excited from a global investor into India perspective.
Right. So fintech, agri-tech, clean tech. And yes, agri-tech, a lot more needs to be done. And one of the large private equity firms had shared that they are very keenly looking at India's agri-tech space, which is still at a nascent stage right now. But Sumir, when we talk about fintech, regulatory aspects can really put pressure on a particular segment, like it has done on one part of the fintech. I won't say the entire basket. What is your view on that? And are we going to see the biggest transaction, mother of all transactions in the fintech space, where the investors are clamoring for an exit but have less opportunity?
So yes, you're right. I mean, I think, fintech is one space which has got three double whammy, more than a double whammy, three whammies hitting it one after the other. COVID was good for pretty much most verticals because the digital transformation took off. Happened for fintech too, but collections and other things led to fair bit of a red on the balance sheets. And then there has been regulatory as a big issue, right? And if you look at the deals that are happening, some of those deals are actually essentially companies which raised a lot of money for a particular business model which no longer exists, and now they are looking to change. So, for instance, many companies raised fairly significant lot of money based on credit card as a model for consumer lending, and then RBI regulations stopped it. So you've had unicard buying companies, and you've had slice buying companies. Maybe FabPay might buy something. BharatPay, for its own reasons, is also part of P2P lending companies. So these are essentially companies with capital buying using M&A as a mechanism to fix a business model which got spoiled for no fault of theirs in some sense, right?
Yes.
So yes, this is definitely a trend in M&A that we are seeing.
Right.
In fintech, especially, this is a sustainable trend, if you ask me. Because,
Right. All right. So important points there, but we have very little time. And Anuj, just a final word on two very important points right now. First of all, the governance angle, and some of your portfolio companies have also come in the middle of a storm because of that. So how is the governance aspect developing? Is this downtime giving a lot of time for the startups to really go back and overhaul their governance aspect, and how is VC really taking part in that? And second, very important point, in a PharmEasy kind of a situation, it's mere 2,500 crore rupees of debt, because of which the company is almost getting a white knight strategic investor, right? So Anuj, is there an IBC kind of a code or something that can be developed specifically for the startup world, if you have any insights on that very quickly?
Yes, so there is an interesting analogy which we tell to our startups. Are you a ship or are you a pirate? See, you cannot be on either side when you are startup, because early stages you are focusing on innovation and you may not even know what the word governance is, but you cannot be a pirate and ignore everything, and you cannot be a ship from day one as well. It has to grow in a sustainable manner and a systematic manner. Is the eyes of investors and founders coming back on corporate governance being a very important aspect? Yes, it is definitely. I would say it's not just us, but the government is also now playing a very,
all
very
right, so government is also focusing on that. And my question on the solution for a debt-laden or the recovery of the stakeholders from a startup which is fighting for survival. Any thoughts on that you can leave us with? 30 seconds for that.
Yes, I think there is time to achieve that, but I will say more importantly, investors need to play a very important role, and more so equity investors have to play an important role.
Yes.
When it comes to such things. We've seen such examples, yeah.
All right. So you left it at a very good note, and I would go back to the story I broke this week, that the investors played a very important role in stitching together a transaction, which is not just bringing in funds, but probably a more experienced hand and a strategic hand in the PharmEasy transaction. Thank you so much, Anuj, Sumer, as well as Shaurya, for joining us on Big Deal. And thanks to all our viewers for tuning in. Stay tuned to CNBC TV18.